Hello guys, good day. This is Oziden and today we'll be talking about liquidity. The topic is spot the liquidity or become the liquidity. Liquidity is a very important topic in the forex market. I get it. Now, the last video I uploaded, a lot of you did some backtesting and practices, which I love, and I saw the results you guys sent. It was really impressive. So that's how to separate a good trader from a bad trader actually. A good trader or an aspiring trader, once you see something, once you see knowledge, don't just take it. Back test it, test it. Does it meet your requirements? If yes, then you can start using it, not just watching it. Stop taking people's words for it, okay? Do the working, put in the work, back test what you have been taught, back test what you have watched, okay? Then you can use it. Back testing. Most of you don't even know the meaning of back testing. Back testing is not actually used to know your TPs. Is actually made for you to be able to find out your level of profitability or find out how bad your strategy is. Which means if you take 50 trades now and you hit 30 SLs and 20 TP, that simply means that strategy you backtested is good. Yes, it's good if you have good risk to reward. For example, 1:3. So if you have 20% win rate or 40%, so that's 40%, yeah, you have 40% win rate and you have a risk to reward of 1:3, you are good to go. Okay, so backtesting is actually used to what? Check how good or how bad rather your strategy is, so that you know how to scale up. Okay, so that's that. So moving on, so this topic is liquidity, like I said before, and I know you all know the basic type of liquidities, which are the double bottom, double top, and all, right? Now, I see some mentors doing this, though I'm not bashing anyone. I get in the forex space is very big, so you can learn. But when you are learning, know what you are learning actually. Some people will say this double top is a basic type of liquidity. I laugh. It's still working till now, okay? Double bottom. Though we will talk about the advanced liquidity, but these ones, you have to know them first, okay? So, these basic ones bet the advanced liquidity. So, you must know this one before you can know the words, the advanced type. So, we have double top, double bottom, and we have trend line liquidity. This one almost, in fact, if not all the time, it shows up in the market almost all the time. I get in 90% of the time it shows up. Just train your eyes to be able to spot it, okay? So these are the three basic type of liquidities. And which other type? I won't touch the rest like the old lows and old highs. No. This is the one we use in our strategy, okay? So focus on these three for the basics. Then for the advanced, I'll teach you the advanced after I've explained this theory. For example, we are in an uptrend. Here's my path through. Please pay attention. This topic is very, very important. If you can't spot the liquidity, honestly, just be eating SL anyhow. For example, now we are in an uptrend. Most of the SMC traders, what they will do is what? Simply mark their order block, which is yes, is correct. Simply mark their order block. Now, where I'm actually having problem with you guys is, why do you actually expect markets to come down to this your order block and move? That's my question. Why? It works. It works. But in the concept or with the concept of liquidity, this isn't right. Okay, because how can you buy without selling? You guys said market is all about buying and selling, and now you are buying, you have not sold. So who did you sell to? Who did you sell to? Look at something now. The market bought from here, then sold from here to this other block, but it didn't sell to the people waiting here on this other block. It didn't sell to them, but it moved up. If it sold to them, it would have swept this low, which means it sold to them, then it bought. But you guys are always saying market is all about buying and selling, and now you are just buying, you are not selling, which means you are doing something wrong. Like I said, this thing works mostly if the trade is already in a deep uptrend or deep downtrend. Then you can use any other block. But if it's in a point of reversal or is in an old low or old high in a higher time frame and you are looking for a reversal, a shift in market structure. Don't just take this type of structure. This is my advice, okay? This is my advice. Even though it's not even that type, trading alone, trading your structure alone, don't trade it without liquidity unless you're using a strategy that doesn't require liquidity. I think I've uploaded one video on that. If your strategy doesn't require liquidity, no problem, you can be taking the trade without liquidity. But if it requires liquidity, which means if you are trading structure and liquidity, make sure you don't buy when you have not sold, or you don't buy when the market was have not sold. Very good. Now let me make an example. Let's say a businessman, although someone that is selling all these biscuits in provision store. How did they get that biscuits? They went to wholesale, yeah, to buy it. So they bought the biscuit and they sold to you. Remove forex from this now. Let's just do normal business, normal trading stuff, not forex. So the person bought the biscuit and sold. So what happened there? Buying and selling. The person just started selling the biscuit like that? No, the person bought first. Now you bought from the person. I get it. The person bought from somewhere and sold to you, which means buying and selling has occurred. But in this scenario now, only buying is happening. There is no selling, which means there's something wrong with this thing. So my advice is, anytime you want to buy, always look for what an order block below or above your zone. This is a friendly advice. Always look to sell first before you buy. Follow the market to sell before you buy. I'll show you an example on the chart, okay? This thing will save you a lot of money and a lot of losses. It will save you from a lot of losses. You guys should not play with the concept of liquidity. Very, very important. So if the liquidity doesn't appear like this, it will appear in the form of the double bottom or double top or trend line. For example, now, this is a breakout structure. So let's mark our order block. We have different forms of liquidity. It can come in form of this. If it comes like this is a correctional movement here. If it comes like this, then you can take your trade without even seeing any liquidity in this leg. Okay, if it comes correctional like this, you don't need to wait for liquidity to form here. Okay, if you check the move here now, it is an impulsive move. So it broke the structure with an impulsive move. But when it was coming back, it came back with a slow movement, a correctional movement, which means it came back with trend line liquidity and swept it. I also swept it again for the second time to the upside. Swept to the downside and also swept it to the upside. So this alone is liquidity. So you are safe to take this kind of trade. Why the second one? Like I said, I told you guys that the basic liquidity is not out of this. It's still very, very important. Now we have used trend line. It's not easy. And this thing almost happens all the time. Yeah. So the second example is the double bottom. So let's say this is a breakout structure. Then this is our order block. Let me mark the breakout structure so that you see it clearly. So this is the breakout structure here. Then this is the order block. So the double bottom will appear like this. So you come here, do as if you want to move up. It does not mitigate to, but some traders will just enter buy. Then you think we have something like this. Come back again. Some people will be like, wow, this place is support or resistance, blah blah blah, something like that, which is so bad because it has not mitigated your original zone. You get it? Then until we do something like this again and move up, you will not be happy. Oh, we are in profit. Before you know, bang bang, that's taking it out. TP. Some people will be like, the thing hit my SA and hit my TP. It's your fault, okay? You couldn't spot the liquidity, so you were used as the liquidity. So this is double bottom liquidity. So all these things are important. Don't let all those, let me not say anything. Don't be deceived here. Don't be deceived. Not every information you see you follow, okay? Now, the last one, which is the double top, is for what? Downtrend. It's for downtrend. Let me see if I can draw that. Okay. Market is moving. Then broke a structure. Right? So you mark your order block. Order block that caused that break. Then here is the double top. Or you can come back and do something like this. Oh God. Sorry about that, guys. Sorry about that. So market can come, right? Market can come back and do something like this, form a double top here, then take the double top out and hit your TP. So these are the different type of liquidity that we have. Okay, be watchful. Be watchful, please. This video is very, very important. Make sure you watch it at least. Wait, before I even move on, please subscribe. Subscribe to our YouTube channel. Okay, and turn on post notification. Also join our Telegram group. There we drop free signals. And if you want to join the mentorship, you can also join. You can reach me on WhatsApp. On my Telegram, you see my number there. You can reach me on WhatsApp. And if you want to join our premium signal group, you can reach me on my Telegram too. Okay. And if you want to join the free signal group, is on Telegram. Just join the Telegram. You can be taking our free signals there. Okay, so that's all. But make sure you subscribe to this YouTube channel, because sometimes we receive like 1,000 views, whereas only 100 to 70 people will just subscribe. It's not nice. Okay. Once you watch, you like it, then you subscribe. Okay, so that you will be getting more of this all the time. So moving on, these are the different type of liquidity that we have. So let's use USD card as an example. So let me look for an example here on USD card. Okay, I've seen my example. Let me use the replay tool to show you guys. Okay, so let's say this is a break of structure. This is a break of structure. So if you actually check,